Okay, quick review of the markets here on March 30th. So, second to last day of the month, quarterly candle is almost fully baked. We'll start with the S&P 500, looking at the monthly chart here. And so, the first thing to point out is we have a monthly swing low in place, and that's what this line here is denoting. So, this line here at 45.95.31 marks the high from last month, so February's high. February was the month that we had the low. So remember, a swing low is when you have a candle that goes above the high of the candle that marks the low. So in this case, the candle that marks the low is the February monthly candle here, very clear, makes a new low, and we've now went above the high of that candle. So we have a monthly swing low. That is incredibly bullish. That doesn't mean we can't get a reversal. Of course we can. You can always get a reversal. You can always have a big candle that's green or red. But this is a very bullish condition here. Um, so this would be we would have had our bottom on month 23, and this would technically be the first month of our new yearly cycle. And if we look at the weekly chart, we'll just kind of work our way down the time frames. Also incredibly bullish, right? So we had our low here. We came around. We had a swing high here the next week. So a little bit scary, but we did not make a low below this low here, which is why we didn't make a new monthly low. Same levels, right? And so now we're in week 5 of this new weekly cycle potentially, and we've just made a high above, this last lower high here when we're starting to consolidate. And if we zoom into the daily chart, well, before I leave the weekly, you can see even this bearish cycle here that we just finished, that was 20 weeks. Even that bearish cycle had a high on week 13, right? And if you go back, even really, really bearish cycles, all right, here's a high on week 8. Here's a high on week 7, right? And so even if this were a bearish cycle, there's no reason why we couldn't make a few more weekly highs. We could even maybe, get within 1% of the all-time high before rolling over again. There's no reason that can't happen. And so again, we could get a major reversal from this point on, but right now there's no real sign of that. And so finally drilling into the daily chart, you can see, so this is where we do have a potential reversal coming, but it's on one of the lowest time frames. And so I wouldn't be super worried. If anything, I'd be trying to position myself for putting a long on once you have a swing low. But right now, all we have is an inside day so far. So going back again, this is your weekly cycle low on the weekly chart on week 20. Within the daily cycle, it was day 22. So that's actually a really short daily cycle. You can see the daily cycle before that was day 34, and before that was day 43. One of the last videos I made was when we started coming down. We had made this high here, kind of a double top situation, and we had started rolling down. And so you can see, very importantly, we're now above that level, right? This is the level we failed, right? We came down, we made a lower high. We couldn't make a lower low, so this was a higher low than this one, but then we couldn't make a higher high. We had a double top and then we rolled over. Now we're above that level, and look at this. We're essentially back testing it, right? Now, I would expect that this pullback would continue. You can see we actually have a gap here. I'll get rid of this line and I'll add one to denote the gap. Yesterday we had a gap up which did not get filled. You can see we did come down a little bit per this lower wick, but we didn't quite fill the gap. That gap is down to 45.75. And so I see no reason why we couldn't come down there, maybe even get a little bit lower before moving higher again. So, another higher low, because 23 days into a cycle is pretty long. We could easily start moving into a DCL or, some, really late half cycle low. Now here, the interesting thing is that, long story short, it looks like a pullback probably just started, but today, day 24, is still just an inside day. We need to break below the low of yesterday for things to really, to know that, a real pullback is underway. And that would be below 45.89.66. You can see that happened this day, right? We got a nice break of the previous day's high, and then we just resumed up. So it'd be nice to get that maybe even another day down to just kind of reset things, because in an uptrend you need higher lows, right? You can't just keep making higher highs, higher highs, higher highs. See, right, this is a high, this is a higher low, that's a high, we need a higher low, and then we keep going, like just to kind of drive the point home. I'm talking about something like this, right? So like we come down here, then we go up, then we come down, then we go up, then we come down. Like that's what you want to see, right? That's healthy. Like you can't just go up in a sort of straight line. That's just asking for, a really big pullback, really something really violent that comes suddenly. And so I'll switch over to the QQQs because they've actually diverged from, the S&P in that for the Qs, we actually did make another low. And so I'll actually go back to the monthly cycle, the monthly chart for the Qs. And so the Qs, unlike the S&P, did make a lower low in March. And so we now have a bullish outside candle, which means we made a low. The best way to think about it is a bullish outside candle or a bearish outside candle for that matter. They both have the same characteristic in this respect, that they make both a higher high and a higher low. In the case of a bullish outside candle, it ends green, so the price is still moving higher. And in the case of a bearish outside candle, the price ends red, and so it's moving lower, right? And so we made that low and then we reversed. If you think about it, it's also essentially a fake breakdown, in this case, on the monthly level. And so this is a very bullish formation. You can see this almost was an outside, almost an outside month. You see we got some good follow through the following month. This was an outside month. Now this was interesting because it led to the top here. But this, again, is a very bullish formation. And this would be month 24 of the yearly cycle. And so this would potentially mean April is the first month of the new yearly cycle. So this cycle here was 15 months. This was 24. I'd imagine this one that's just starting now is probably going to be a little bit since this recent one was pretty long at 24 months. That is a pretty stretched monthly cycle. And if we look at the weekly, again, similar to the S&P in that pretty bullish formation. In the case of the NASDAQ, that bullish outside month was created by this bullish outside week, right? So we came down, made a new low this week, and then we reversed violently higher. That was week 23, which marks our ICL, whereas the S&P had its ICL on week 20. So that's interesting, right? That means the Qs are actually only on week 2 of the new weekly cycle, whereas the S&P is already on week 5. And again, similar kind of situation. If we zoom into the daily chart, we are now coming up against levels where we failed. In the case of the Qs, remember the S&P had a bit of a double top situation. The Qs didn't get nearly as close to that second rally attempt, didn't get nearly as close to that level. And so you actually have, it's actually a bit weaker, but we're still coming up right at that level. And now we're getting a little bit of consolidation here. Very similar situation to the S&P. We had a gap up. In the case of QQQ, that gap would get filled on a move down to 36.8069. So, call it 36.70 or call it 367. You'll probably get a little bit lower there. Again, same situation. We need lower highs, right? Or excuse me, we need higher lows in an uptrend to keep things healthy and to avoid really, really violent pullbacks. This is day 12 for the NASDAQ, and which is not super late in the cycle. So while the S&P is probably coming into the timing band for a daily cycle high, I would say this is still relatively early for a daily cycle high, but we'll have to see. And finally, I will do IWM, which is on a different count as well. So this is really interesting that like the three major indexes, in terms of, number of companies they represent, the NASDAQ, the S&P, and the Russell 2000 are all on slightly different counts, right? And so interestingly enough, The Russell is also, I'll start with the weekly chart. The Russell is also on week five of a new weekly cycle, just like the S&P. But in the case of the Russell, the previous weekly cycle was actually week 31. So it was a really long weekly cycle. The one before that was 20 weeks, the one before that 22, 28. And so I would expect this to be a relatively short weekly cycle to balance this out. So maybe it ends. So I imagine we probably don't go past, let's say, 20 weeks. So that would put us at, we'd see maybe our next major low, our next weekly cycle low around, early to mid July. We'll see how that kind of plays out. But this is looking bullish. I'd say this little pullback today, not exactly what you want to see, but let's drill in a little bit more. If you look at the daily chart, we had a really short little cycle, it would seem, right? That bottomed on day 18, which is the same day the S&P bottomed. Just like the S&P, we did not make a new low, right? This is the day that the Nasdaq made that new low. In the case of the small caps, we did not. We just kept moving higher, which is generally a sign of strength. We're coming back here and we're consolidating kind of right back at this former sort of high. And so this right now is healthy. Again, similar to the other indexes, we had a gap. This gap gets us back to 209, which is also the level that denotes a new monthly high. So you can see last month our high was 209.05. So it would be perfectly healthy to test that level. And if it were to hold, we form a swing low. That is a perfect opportunity to get long, or if you're already long, potentially add. And so definitely important next couple of days, because this is where we find out, can we hold a higher low, right? Everyone is always really excited about the rally, but I always say it's actually more important to understand how. I'm actually oftentimes more excited by the pullback, because the pullback tells you if you have real strength, if you're able to hold that higher low. And last thing I'll do really quickly is I'll pop on the 200-day moving average, because I think that's just interesting to note. So so that's this yellow line here. So you can see we back tested that. We came up above it. I'll zoom in here so it's really easy to see. We came up, right? We came up, back tested it. That's the day that we made that daily low, and then the next day, boop, like a rocket ship up. And so I would imagine this pullback, if we're really seeing strength, should not come back to the 200-day again. So you can almost think of that as like, if we came back to below 44.88, that would probably be a warning signal. And you can just look at the market structure. That was literally the scene of our last higher low, right? This is a higher low. We moved up. This is a higher low. This is another higher low. So we'd want to hold this. If this came down, right? If we saw something like this, well, that's a lower high, right? And that, so we might expect that we come back here like that and do something like that. Again, anything could happen, but this is what you'd want to look for, right? You'd want to look for this pullback not to go much deeper than, like, let's say I want to call it the 4,500 area, but we'll have to see.